Good day, YouTube. How's it going? This is Greg Freeman from Freeman CPA. Today I'm going to discuss with you pass-through taxation and tax planning and payments. So one of our new clients basically reached out to me the other day, and they just started up their operation. It's a partnership. There's two members in the partnership. They're a service-based company. They do repairs on site for a certain type of product. And what ends up happening is, just like any new business owner, they don't understand exactly how taxes work, and we send out reminders to our client base that there's quarterly estimates coming due, and those quarterly estimates are April 15th, June 15th, September 15th, and 1/15 of each year for individuals. And we send out that quarterly reminder saying, hey, it's time to pay your estimated taxes. If you're in business or you have some sort of life change or situation change, you may need to pay in estimated taxes. So reach out to us with any questions so we can help you plan for that and send in the right payments. So of course, being new business owners, I get an email from them, which is the right thing to do once receiving that email. And their question is, well, we're brand new, we're ABC partnership. How exactly do we go about making payments for this partnership? So that's a really great question. And obviously I sent them all the information that they needed, but let's quickly discuss what this means, because you might be thinking for yourself the same exact thing. Hey, I'm brand new, my partner and I just started this endeavor. We're new owners of this partnership, this LLC or this S-Corporation. How do I go about making payments for this business that we just started? Well, the answer is you don't. Unless there's very specific state tax ramifications and we're dealing with state estimated tax payments for business on a federal level, there is nothing for you to do. So why? Well, because we have this term called pass-through taxation. So again, this segment is to discuss pass-through taxation, planning for tax payments. Okay, so I'd like for you to understand the first part of this is, the key word is pass-through taxation. So what exactly is pass-through taxation, and why does it matter? Well, let's look at an LLC, okay, for business. And I'm going to use the blue highlighter because the black one's already running out of ink. So LLC or S-Corp, all right, they're both really pass-through entities. All right, what are pass-through entities? Pass-through entities do not pay a tax. They are non-taxable entities. Non-taxable entities for federal income tax and for state income tax, and now for a local, it may be subject to tax. This is not going to be a video about either one of these. We're going to discuss federal income tax, because if we start delving even into, I'll briefly touch upon the state income tax side of things, because this could be a whole separate segment. So we're in the state of Florida, and this would really apply to any state, because we're going to be discussing federal income tax ramifications. Now remember how this works. Let's discuss quickly, because this is also a big topic for most people, because most people are like, when we're discussing state tax ramifications, the first thing they'll say is, wow, well, I don't want to have the IRS know about it. But the IRS is not a state tax authority. So IRS, now I think this is going to be an okay picture of the US, maybe. If this is the USA, it's a really bad picture of the USA. But if this represents the map of the USA, the IRS represents the whole thing, all right, for simplicity's sake, all right? The IRS is really what is known as a federal level entity. Federal level. Tax, let's do tax authority. Because when we're dealing with taxation, that's really the correct terminology. And you have state level tax authority. And then local and so on. So state level authority is really, you know, state by state, and it varies. So they have their own state laws, they have their own state tax laws, they have their own workman's comp laws, they have their own Department of Labor laws, their own rates, their own tax system. Everything's different, completely different on a state. That's why we have this really convoluted mess when we're dealing with state taxes, because of there's a lot of you know, items that are similar when we're dealing with state taxation across state lines. There are similarities, definitely, but on a different, you know, if you start really diving into the details between Florida and New York and New Jersey, we have completely different state tax rules and different local tax rules as well. But again, the federal level of tax authority really encompasses everything on a large scale, and that's when we're talking about the IRS. And the IRS has its own rules and its own regulations and its own authority, and it's worried about its own things. That's why we call them entities or tax authorities. They're very different, right? So state level is, you know, if you live in Florida, you have to worry about the state level taxes and the federal level tax. All right, so that's basically where we're at. So that's authorities, and this video is going to discuss federal level pass-through taxation. So what is pass-through taxation? So you have this LLC and you have S corporations, and they're pass-through entities. Well, what does that mean? That means they're not taxable entities. They don't pay income taxes for federal tax purposes. They basically don't exist. What they need to do is file forms, and those forms for an LLC, let's say a two-member, or, you know, we're discussing partnerships here, or two shareholder entities here will file its own forms. So an LLC will file a 1065 IRS form for partnerships, and an S corporation will file an 1120S form for S corporations. And this is also with the IRS. Okay? And this is where LLC and two-member LLC is now a partnership. I'm not discussing a single-member LLC situation. That's a completely different thing. That's why taxes are so specific. We have you know, very vast differences in what you have to file and how taxes are going to work depending on your specific situation. So you could never go out there and say, well, my friend has this and he pays so much and that much. Why am I not having the same thing? Because taxes are very specific, and what you have might vastly differentiate from your neighbor. So don't ever compare what your neighbor has. That's a very big misconception, and that doesn't apply to you. Taxation is like a shoe. No other shoe will fit you like your shoe, or like you have very specific feet. You know, nobody has feet like yours. Taxation is exactly like that. So just get in the habit of thinking of it that way. Now, a two-member LLC will file a 1065 IRS partnership return, and an S corporation will file an 1120S for S corporations. Now, these are what we call informational filings. Well, what does that mean? Why is it informational? Because they don't pay a tax. That's why. So we actually just file a form with the IRS, but there is no taxes to be paid. So what we're giving the IRS is information as to what's happened with this entity. Now, you might be asking yourself, well, if this entity and that entity are non-taxable entities, then how exactly, who's paying the tax? Well, of course, the members and the shareholders are going to be the ones that are paying the tax. And you're going to say to yourself, well, gee, if I'm paying the tax for my entity, how much taxes should I pay and how exactly will that flow through to me? And that's where the term flow through taxation or pass through taxation happens. It's like passing through that information to the owners. Okay, so if we have a 2-member and they're filing a 1040 tax return, right? The information from the LLC is going to pass through to each one, and from the S-Corp is going to pass through to each individual, where the information will be fed into the 1040 of each one of those entities, and then this is where we pay the taxes. That's how it works. So these entities are just like people. They're other people. And just like people, they can have different things happen to them, right? So an LLC and an S-Corp can have different activities. It could be in for business. I can set up an LLC for investment, like to hold real estate, right? Or maybe just purchase a stock portfolio. It can, just like any entity, it can hold a farm. Just like you can go out and have many different things happen to you in your life, and you can own a farm, and you can buy a real estate investment, and you can buy a stock portfolio, or just anything can really happen to this entity. And then that entity will have all of these things play out on an entity level, right? So this is a very important concept. So what happens when this entity goes out and, has all these different things happen to it? Well, that entity has to, remember, that entity still has to pass through that activity over to that person or individual member. So it cannot lose. That activity flows via this form, this IRS form, and a state equivalent, what we call a Form K-1. And that Form K-1 are really instructions to get to the 1040 as to what that entity has had happen to it in terms of activity, whether it had interest, dividends, capital gains, guaranteed payments, distributions, so on and so on. So this K-1 form actually has like 1 million boxes on it with very specific instructions of each box where it should land on that 1040. So it's kind of like a mechanic's instructions to fixing a car with different parts, right? And this K-1 will say, well, this LLC had interest, it had dividends and long-term capital gains, and interest is taxed at ordinary income rates, and the qualified dividends are taxed at long-term capital gains rates, which are low rates. And it also sold some stock, and it had long-term capital gains, which are also low rates. So when this long-term capital gain hits that 1040, it will not lose its characteristics, and that individual will pay taxes at the right rates and report things on the right line items, because that person will have to report long-term capital gains on a long-term capital gains schedule, the Schedule D, and all its correlating subschedules, the 8949s and so on. And that's really important to understand, because then all of that will now be taxed at the long-term capital gains rates on that person's 1040. That's pass-through taxation. So that's how pass-through taxation works, and it works the same way with an S corporation. The mechanics are slightly different. The K1 is slightly different between the LLC and the S Corp, and the K1 actually will say on it 1065. And if it's an S Corp, then the K1 will say 1120S for S corporations, because there's also some differences between the two. And you know, like LLCs have guaranteed payments, but S corporations do not. That's some of the variations that we'll see, but the ideas are the same. I'm not even going to jump into the state level, but that's why it's so important to understand this concept before we go into like, how much should my business pay? That's a great question, but the business doesn't pay any income tax. You do. So that's there are annual fees that an LLC needs to pay on the state level, but not to the IRS. There are LLC fees and there are S corporation fees that are paid here in Florida. We have the Department of State issues an annual fee, which is due by the 1st of May of each year for all of the for the all LLCs that are born to the state of Florida, and for the S corporations that were formed in the state of Florida. And that fee can be $135 for S corporations and maybe $150 or whatever. I don't actually know, whatever it is for the LLCs. New York has its own schedule and its own fees, and so does Vermont, and so does Illinois, and they're all due at different times, and they're all just for LLC owners. It's not something that we typically handle because we have clients all over the states, and there's different schedules with every single state authority. So that's something that the registered agent will actually contact you if you have a registered agent in your state, or if you're doing business in another state. It'll definitely be something that you should be well aware of, because you do get fees for not paying those in on time. There's penalties involved, but that's a state level annual fee. That's a doing business type of fee. It's a, you know, hey, you have an LLC in my state, you're going to pay, you're going to pay me an annual fee just for being, doing business, or because you're a entity of this state. All right, so that's very different from income tax on a federal level. That's very different. Again, for federal tax, income tax, these don't do anything but report to the IRS on these informational forms, and that's all they really do. They don't do anything else. But you know, obviously, if you go out and you hire employees, you'll have to pay payroll taxes, and that's a separate thing. So remember, in our world, we have, just like we have different authority, right? Just like we have different levels of authority. Federal, we said we have federal, right, authority, we have state, and then we have local. Just like we have different authorities, these authorities have different levels of taxation. So for example, federal means IRS, and the IRS has different types of tax, right? Different types of taxes. And just to give you a few types of taxes, the one that you're most familiar with is the income tax. But we also have capital gains tax, right? And they come in a whole host of flavors. We have alternative minimum tax. We have additional Medicare tax. We have the net investment income tax. We have household employer tax. We have on and on and on. Gift tax. We have estate income tax, estate tax, and estate income tax. I mean, it goes on, right? Payroll tax, and so on. On a state level, we have similar things. We have something like sales tax. which is very specific to states. Has nothing to do with the IRS. The IRS doesn't do sales taxes. People think that sales taxes has something to do with the IRS, but it's only a state tax. Has nothing. The IRS doesn't care about sales taxes. It's not involved. It doesn't issue sales taxes. It doesn't audit sales taxes. It doesn't issue any regulations on sales taxes. Sales taxes are very specific to a state, and they're on a state level. And when you're opening up a business, you should consider if your business is going to be subject to any sales taxes, and that would be on a state level. But just like the IRS, the state also has income tax. Not in the state of Florida, but in other states it does, right? And there's also inheritance tax, which is something very specific to states. Some states have inheritance tax, some states don't. And local tax has its own, so when we talk about state and local, we call it SALT, S-A-L-T for short, state and local taxation. And that's, some people just specialize in SALT and they do nothing else. So when I worked in public accounting, we had our SALT experts, people that understand the tax ramifications of state and local income tax, because it's its own world. It has its own everything. Like New York City, for example, taxes LLCs and S corporations as if they were not these non-taxable entities. Wow. Did I just pop your brain? That's right. NYC disregards S status. NYC taxes LLCs for the UBT, the unincorporated business tax. New York City says, well, if you're an LLC in New York City, you have to pay me taxes on the business because you're unincorporated, just like that. And if you're an S-Corp, well, we're going to treat you like a regular C-Corp, and we're going to slap on almost 9% in taxes on profits. So it completely disregards IRS rules, and it has its own authority, and it has its own rules. Hey, you're doing business in New York City, I'm going to tax the bejeebies out of you at 9%. And that's when you start saying to yourself, wow, well, now I really have to think about, because the UBT is like at about 4%. Should I go with an LLC and get taxed with the UBT, which kicks in at its own rate and has its own rules, but it's a much lower rate? Or should I go with an S-Corp where I'm going to be paying taxes on profits at 9% as if I was a C-Corp? That's New York City for you. And then you want to actually think to yourself, well, LLC, S-Corp, also because S-Corp and LLC has differences in federal income tax, which is the IRS. See how convoluted we're getting so quickly. All right, that's besides the major point here. The point is to talk about tax planning and pass-through taxation. So hopefully you guys understand. So when my clients ask me, hey, how do I go about making payments for my business? We're new. The answer is you do not, because your LLC will pass through everything to you guys separately on your 1040s, and that's where you're going to end up paying your taxes there. That's where you're going to be submitting payments. So what does that mean for me? As their practitioner, I have to give them guidance as to how much they're going to pay. Well, guess what? The first thing I said to them is I have to see your personal returns, because you might be married, right, with the missus and 2 little kids. And that's partner A, and partner B might just be a single bachelor, right? So this one's going to have a bunch of child credits. And this one has a working spouse. So she's making some bucks and he's making some bucks. And he's making only bucks for himself. Kids, maybe a dog. Here's my dog picture. It's really sad looking. But that's it. You know, there's nothing else that he has going on. So he's going to pay very different types of taxes because he might not have any other sources of income. And this particular person has kids, a working wife. He has investments. And so he's going to pay a very different amount of tax than this one, even though they're 50-50 partners. they're 50-50. So this person's going to receive, let's say the LLC profited 100,000 to split between both of them. So it profited 200 and it split the 200, right? The profit was 200,000 for the year 2021, and it split the profit at 100K each. This person's going to pay a very different tax than this person. This person might end up paying an effective rate of 15%, where this one might be paying 17% or maybe less or whatever. So we can't easily tell you, unfortunately, how much you're going to owe on your businesses, on your LLCs or S corporations, 200K, because we don't know what your personal tax situation looks like. And you might not need to pay much at all, or you might need to pay plenty. It really depends on your personal situation. Remember, pass-through taxation. All the entity is doing is passing through that income to both of you guys where it's split and paid. So the first thing we need to do is look at your individual returns and kind of understand what it is that you have going on an individual level. And then we need from you that projected profit. That brings me, Angela, to this next screen, right? So I sent them this worksheet and I said to them, guys, I need you to first of all get into the habit of budgeting. This is you're brand new in business, so budgeting and presenting to your, having an idea of what your sales are going to look like is really, really important. And I had this whole discussion about targeting, maximizing how much you're going to earn and all this other stuff, because that's really important to understand as well. Once you sit down and you start putting together on paper how much you can make per month, all of a sudden many things will start to happen in your mind. So because they might be maxing out at 15, but maybe they're going to hire and make more, and then you start sitting down and thinking about it in terms of like, well, I'm currently servicing 4 people a day. It's usually about I'm working 6 days a week. On average, each individual is like about $100 to $200 sale, and then you gross that up for the month, and then I'm coming out to 15,000. So I want people to start thinking in those terms when they're new in business, because that's when they realize what their potential is. Because in business we have profitability, and we want to become profitable as quickly as possible. And again, I don't care what business you're in, which industry you're in, the formula is always going to be the same. Whether you're a brand new business or an older existing business, there's only really one true way to become profitable, and that's to increase your revenues as much as possible and reduce your costs as much as possible. So getting in the habit of budgeting and looking over your numbers is very important. And that's where software like QuickBooks comes into play, because once we have a year worth of data, we can look at the prior, and that's how we build our current year budget. And it helps us analyze and assess our financial situation for our business, and helps us become great business owners, because we're constantly in the habit of looking and planning for our business. So it's a very important thing to do, besides just, hey, here's all my stuff, help me out. You have to be able to help yourself out as much as you can too. This is not, we're all adults. We all have to make sure that we're, helping. Whenever you come to anybody and you say to them, just do it all for me, you're really setting yourself up for failure, because it's always a two-way street. It's always an effort from both sides, and you have to be your own advocate. Obviously, you want to find the right professional, somebody that's very good at what they do, Freeman CPA, but you also want to make sure that you're helping yourself by doing as much homework and legwork on your own. Read everything you can. Get your hands on what others have done in your industry, what a successful people do. Get motivated, really rev up that engine, and really get to know how to make the most of your endeavor. This is it. This is your business. This is your bread and butter. This is what's going to make it for you or break it for you. By the way, I think 70% of new businesses go out of business in the first 5 years of doing business. I don't want you to become that statistic. I want you to succeed. Remember, our motto here at Freeman CPA is what, Angie? Your success is our success. Very good. Your success is our success here all day, every day. So I'm going to teach you everything I know, because I've worked with hundreds of businesses just like yours, and I've done a lot of homework in it. And I've seen a lot of things by now, and I understand what works, what doesn't. So I want you to understand the same. All right? So get in the habit of doing these budgets and looking at it. But back to our story, so I gave him this budget and I said, here's a template. I want you to start thinking about the income, the expenses, and then I want you to think of it in terms of percent of expense to income. So if your parts inventory is, I think here in this example, I put down 30%, the 4,500 is 30% of 15,000. I said, well, then look at your parts. Is that a good benchmark? Is that something that others are paying for their parts in a related industry? Or should parts be more at 20%? Start looking at what you've spent and kind of get an idea of maybe I should buy some parts at wholesale. Maybe I should look at other distributors of parts so I could save myself money in the parts, because 30% might be way too much for my line of work. Maybe it should be more like 20. So again, back to that same concept, maximize gross revenues, reduce expenses as much as possible. That's what we're trying to accomplish on a regular and ongoing basis. Businesses evolve, things change. There's COVID, there's shortages, there's everything. So as things evolve and change, you have to right away adapt and right away mold yourself directly to accommodate for those moving changes. And that's, again, something like this helps you do that, whether or not you believe it. So now that brings us, so the whole point of this is obviously to get a profit and figure out what the taxes are, yes, but the bigger picture is also how to make payments, but how to actually learn how to budget for your business, how to come to a profit for the year, at least for that very first year, to be able to come to this profit and then understand how much I'm going to actually need to send in taxes, because taxes are a cost of doing business as well. So I want to know how much I'm earning, right? Before and more importantly, after taxes. So if my taxes on this $36,000 worth of profits is going to be another, let's say, $10,000, I profited $26,000 for the year, but look how much work I've done. And all I've made was $26,000 after taxes, and I put in hundreds of hours. Well, what's my work worth? You know, am I making $5 an hour here after all of this headache? Hiring an accountant, setting up shop, taking on risk as a business owner, advertisement, all of this, and all I'm left. So that's why this will bring it to light. And by the way, this is something that you should have done before you actually even started out in business, when you were putting together a business plan. But if you haven't done so, it's okay, because you can still do this and still understand how you're going to do, how you're going to perform before and after taxes, and take taxes into consideration, because that is basically a cost of doing business, right? That's the thing with being self-employed. We have a lot of costs. We do have a lot of great benefits that the tax system allows us. We have a lot of deductions that others are not allowed. But at the other hand, we have a lot more responsibilities to bear, a lot more that we have to actually carry on our shoulders. So just get in the habit, and obviously this doesn't have to be very hard, but I do want to see, like most businesses, budget for advertising and promotion. Many times I have business owners and I don't see anything on their ad spend, and I'm always shocked. And it's not, some people are a reputation-based business, so they don't really think they need it. But believe it or not, even if you're doing great just on reputation, you should still be advertising. There should always be a line item for advertisement on your budget, because advertisement is just something that's always going to keep your greases flowing, regardless of how your reputation is doing. All right, that's a very important thing to understand. Yes, and then there's obviously, parts and all these other items that they might not even thought that they might need, and it just gives them an idea of what they'll actually profit. In this particular case, they might not need subcontracted services. They have to collect sales taxes, so I use the 7% rate. They might have some rent, some professional fees, and so on and so forth. But merchant processing, they could possibly save there, because I use 6%, but they might be paying 2% if they're using a different merchant processor. But this is basically And then there's some fees are quarterly, like insurance. That's why you see gaps in the insurance, and they pay the insurance quarterly, or maybe they pay monthly. Everybody sets things up differently. But that's why I sent them this worksheet, and I said, well, first of all, send me your personal taxes, and then send me your projected profits, and then I can give you an estimate. So I explained the pass-through taxation to you guys today. I explained to you budgeting. I explained to you tax payments, federal, state, and local taxes and differences amongst all that, as well as projections and how important they are. And of course, most importantly, is how to succeed in your business and make the most of it. Here we are again, one more day at Freeman CPA, making your success our success. And that's why we're very proud of all our business owners that do business with us. We love all the people that we work with. We have a great bunch of clients. And we're very happy leading the way and trying to help people. So we're constantly evolving as things are evolving too. Some things are, like I said, they're going to be tried and true no matter where we are in life, and no matter how many changes we have. The formula is always going to be the same. You want to maximize your profits and pay taxes as little as possible. All right, that's another wrap for us today. Thank you again for watching. We welcome any questions. This is Greg Freeman from Freeman CPA. Have a great one.